Binance backs out of FTX deal citing due diligence reports of mishandled customer funds. The world's largest cryptocurrency exchange Binance will not go through with purchasing the rival crypto exchange FTX. The company noted that after due diligence and news reports regarding mishandled customer funds, Binance has decided not to pursue the FTX acquisition. After the crypto exchange Binance revealed it would purchase FTX, the exchange has detailed it has backed out of the proposed deal. Binance then noted that it wanted to help FTX's customers, but the issues are beyond our control or ability to help. The exchange further remarked that every time a major crypto business fails, retail investors suffer. We have seen over the last several years that the crypto ecosystem is becoming more resilient, and we believe in time that outliers that misuse user funds will be weeded out by the free market, Binance added. The exchange concluded by adding that the ecosystem will benefit.
That was FTX's Sam Bankman-Fried in a Yahoo Finance interview back in July, speaking on acquisitions in the crypto space and the collapse we are seeing in the aftermath of the FTX Binance deal doesn't really come as much of a surprise to our next guest. Join me now to discuss what's happening in the space as head of macro strategy at Academy Securities, Peter Tur. Peter, I was going to ask you about how much of this deal is likely to go through, and here we are looking at a headline from CoinDesk that seems to suggest that Binance doesn't really like what they're seeing under the hood now that they have put this letter of intent forward. What do you make of this news, and what happens if Binance backs out?
For me, it's not surprising at all. Yesterday, when it was said it was a non-binding letter of intent, it really felt like they just wanted to take a look at the books, kick the can, and see what was there. And it's not surprising to me that they're finding more and more potential holes in this system. I think you kind of have a few key issues here. Is there's all these, whether you want to call them NFTs or tokens, that have varying degrees of potential value. Some are backed by something, some are not. So I think you're seeing people really look at this, and you're seeing FTT drop, you're seeing Solana drop, and it's not far from everyone's investor's mind what went on with Luna. And then the other thing I think you're seeing with these things that we call quote unquote exchanges in various places, they've been very sloppy, I think, with terminology, right? These aren't regulated exchanges. You don't know exactly what they have backing their assets. And in some cases, you start reading the messaging, it's very unclear that they don't commingle what is custodial versus what's theirs. All the things that you really want as an asset manager and think of in terms of clarity don't seem to exist in this space. And I am worried this is just the start of another ripple effect.
When you say ripple effect, I mean, I've heard this comparison over the last 24 hours about what happened with Luna and Terra. You could argue that FTX was a much bigger player. I mean, is that a fair comparison? What are the contagion effects you're worried about?
So I think one, let's just look what's going on with FTT, the token itself. As that keeps dropping, people are going to worry about other tokens. That's going to probably put selling pressure on those tokens. So that's the ripple effect, I think, in that space. Then separately, it is where do people have their money? And people, I think, viewed this very similar to a bank account, something that you had access to your funds, your Bitcoin, whatever you were holding there. And that's going to call this into question. And the first reaction is, well, we should pull this somewhere safer, right? And that's happened a little bit with Celsius. But I think for a lot of people, they're going to be, what if nothing is safer? What if there isn't a good place to put my assets and have them properly custodian? And I think that's the potential ripple effect, is that people not just take their Bitcoin and currency out of here, they decide maybe it's just time to sell this because I don't trust any place to put my cryptocurrency. That might be the wrong move. It might be an overreaction, but I think it's a fairly natural reaction. And I think that's the risk. So you have this twofold ripple effect, both of which cause pressure on Bitcoin and the entire ecosystem.
You had the CEO of Binance, CZ, put out this note to employees saying, this is not a time to celebrate. There is no win here for the industry just because FTX was near collapse. He talked about increased scrutiny from regulators. How are regulators likely to move in light of what has played out in what is one of the largest exchanges?
So one, I think regulators are going to take this as an opportunity to do a land grab, right? They're going to say more and more things are actually securities. It should fall under security laws. And they're going to point to investor laws as saying that had these been better regulated, maybe we could have avoided some of this. So I think you're going to see a bit of a reach by regulators. Then the other thing that your question kind of spurred a lot of thought to me is go back to the great financial crisis, right? First it was Bear Stearns. They had to get bought by JP Morgan. That settled things for a little while. Then ultimately you had Lehman collapse, right? But all the steps of the way, the Reserve was kept trying to shore up the banking system, because it's really not good if one of these entities go down, right? Their assets become encumbered. People have to figure out what to do, but it's the knock-on effect. It's not like everyone else benefits because these assets are immediately going to get transferred elsewhere. It's much more calls into question, do we want our assets at these other institutions? And I think that's what's going on. And you can look a bit what happened in the great financial crisis and how that played out. And I think that's the lesson we're learning. You saw whether it was Celsius or some of these smaller entities that people weren't that aware of. Now you're moving into the big places, right? FTX, if this does disappear or really continues to struggle, that's a big knock, and it puts the bigger players in jeopardy.
Well, and consolidation here, would certainly suggest that there's a lot of power concentrated in just one now, because it was about FTX and Binance being the two biggest exchanges. Now, if this deal goes through, we're talking about just Binance. To what extent does that elevate the risk in the space?
I think it really does it, right? Then how do you diversify? How do you take, what information are you getting from them that makes you trust them that much more than FTX? So I think it really highlights the risk. It puts concentration. And myself as a prudent asset manager, even if I wanted to be in the space, I think you have to reduce your exposure right now. It's just not prudent when you don't know what's going on. I think we're going to see people take another run at Tether, right? It's something that's been plagued by this view that they don't really say what their assets are backed by or what assets they have backing their token.
Here, would that help restore the crypto industry's credibility?
I think regulations do help. So Binance, we had a hack in 2019. That was 3-4 years ago. And we recovered pretty well from that, actually. So we made all the consumers whole. None of our users lost any money. We lost a bit of our own money. That was pretty much it. Regulations will help, but it doesn't solve. Regulations is not a magical pill that just solves all problems. Hacks happen with banks, with traditional financial institutions too. Even banks leaks data, etc. So it doesn't mean that regulations will solve all of the problems. It does give assurance, and also it does set a standard on what is a level of acceptance in different countries, which is very good for consumer adoption. And it also tells the industry players what to do and what not to do, some guidelines. But fundamentally, the businesses still need to protect their own security, their own data, and their own business models. UST, Luna, and other crypto projects that have issues, many of them have liquidity issues, basically meaning that they didn't manage the finances well. Those are fundamental business problems that regulations can reduce, but they're not going to eliminate.